Hello, from LPL Financial. Welcome to The Talking Point. I'm your host, Quincy Krosby.
Good morning. This is Quincy Krosby. This is The Talking Point. It's Monday morning, October 17th. Thank you so much for joining me. My goodness, what a busy week last week, not to mention this week is going to be very busy. A couple of things that are important. Last week, we had a market that defied expectations, right? This was right after the CPI report came out. So the consumer price index comes out, the market tanks. And why? Because it basically nailed a 75 basis point hike for November 2nd, and it showed that inflation continues to broaden in the core part of it, right? Remember, the headline includes energy and it includes food prices. Now, the other part of the story is that keep in mind, it's a backward-looking indicator, right? It's back. Consumer price index, this is from the month before. And over the course of the month, we are seeing surveys suggest that rents, which is that one that the Fed is focused on, rents have been easing. One survey after another suggests that rents are easing. But nonetheless, the Fed looks at this report and basically, as the market interprets it, and says, hey, you know what? The Fed's not going to like this. Inflation is still intact. It's not moving quickly enough, and they're going to keep raising rates. That was the market's interpretation. And the market just sold off dramatically. And then suddenly, we get a turnaround, a complete turnaround, correct? How did that happen? Well, it happened because of a couple of things. When we came into this quarter, there was a very broad sentiment that negative on the market, a lot of put buying. Put buying is I'm buying a put on the S&P 500 because I believe that the S&P 500 is going to come down, right? That's what I do. If I believe the S&P 500 is going to climb higher, I buy a call, right? That means I will be paid if the market climbs higher. And so what happened was there was a lot of shorts in the market, more than we have seen in a long time. It was very broad. And the reason I mention this is that when you see investors and traders shorting the market the way we saw that going into this quarter, it suggests that they did their research and they believed that the market was heading lower because they lose money if they get caught in a short squeeze. So in any event, when that market sold off after the CPI report, there was a view, hey, that maybe we reached bottom. Maybe that was it. And therefore, what you saw was, in essence, a technical move where the shorts start covering their positions, right? That includes buying stock. And that then fed into a feeding frenzy of, oh my gosh, maybe we made the bottom. Let's go and buy more. And meaning more shorts have to cover and cover and cover. You get the point. And that led us to an amazing day, only to see a partial, almost three-quarter, 90% maybe, moving the other way of a sell-off. This is indicative of a bear market with extremely high moves, higher and lower. So that kind of volatility is, how do I say this, is endemic for a bear market. Also, we came into the week, and I think I mentioned it on Monday's call, with the market oversold. So when you have a market oversold, it doesn't take much to have some sort of catalyst to get the market moving higher. And indeed, we did. We had some, earnings reports that were actually good. We had Domino's. Some of the banks weren't as bad as we thought, and so on. So this is important. You put it all together, and it made for a really wild week. Now, I do want to mention something I think positive here. And that is, since the beginning of October, there have been 20 S&P 500 companies reporting. And only 3 of them have had negative surprises. The rest have had positive surprises. Now, you could say to me, Quincy, oh, come on, the bar has been set so low. Of course, there are going to be positive surprises. Well, call it whatever you want. I like the idea that they're positive surprises. But you know what? In terms of guidance, the guidance has not been, totally miserable. And we are going into this week with a barrage of earnings, and we will get more of a sense of what companies are seeing in the next 3 months and what they say about their own clients and customers. And I'll go over that list very soon. But I do want to also point out, pay attention to leadership. The leadership, even on that monster day of the market climbing higher, was energy. We also saw financials doing a little bit better, right? Especially the regionals, especially insurance companies. Many of the big banks said when they reported, they said, we did very well with net interest margin. That's how they make the money. And so the market, responded to that, but we did not see the recovery or even interest in big tech. And that's something we want to keep our eye on. When is that going to happen? The other part of this story is that I pay very close attention to the discretionary sector. If we were moving into a new bull market, what you would see is money going into discretionary from consumer staples. It would be an indication that the market sees better days ahead, right? Because obviously you would see a situation in which the Fed is going to transition to a less hawkish rhetoric, and perhaps when they raise rates, it wouldn't be 75 basis points, but 50. We didn't see that because you know what? The market doesn't really see that yet. They don't see the Fed is ready for a pivot. So in any case, we watch all of these things, and we're going to have a lot more of these kinds of terrific bounces, but also terrific sell-offs. Again, emblematic of bear market rallies. Now, when we look at this week, I want to go over this, if I may, and that is, we heard from Bank of America, and it was truly positive surprise. We also heard this morning from the Empire Fed Survey. Now, that's New York, New Jersey, and Connecticut manufacturing. It wasn't as bad as the market thought it would be, but we really pay attention this week to the Philadelphia Fed Survey. And the reason for that, and it's manufacturing, is that has a closer relationship with the rest of the country, with the heartland, if you will, of manufacturing. So the market will pay attention to see what they have to say on Thursday. That's the Philadelphia Fed Survey. It's manufacturing. Also, tomorrow, Tuesday, we'll hear from Netflix after the close. Now, Netflix has, as everyone knows, been beaten up. They said they're going to introduce advertising. It won't be initially here in the States in the main part of Netflix, but they're also introducing that password. How do I say that? Punishment if you're using, let's say, your son's password. I'm not saying anything on this call, but you know what I'm talking about. We'll hear from Goldman Sachs, but we'll also have a report on industrial production and the National Association of Home Builders. All of these are important. And then on Wednesday, we will get Tesla, we'll have Procter & Gamble, and here's one you may find it interesting is Winnebago, and a number of regional financials, which, by the way, have actually been doing a bit better than their very large cap money center banks. I find that interesting because it tells you that they have, how do I say this, a handle on the region that they're in. They do a lot of work in making sure that, customers are credit worthy, and they have been actually performing. It's been impressive, by the way, to see them inching higher. But on Wednesday, we're also going to have Winnebago. Now, why would I be interested in Winnebago? You may ask. Well, how about this? Winnebago and the cohort of Winnebago, all of those that are building these recreational vehicles, if you want to call it that, but they were important in coming down first. leading the market down. When we started, especially in 2018, they started to pull back with fears over getting loans, for example, that the rates were climbing higher, and also fear that the Fed back then in 2018 was bringing us into a recession. And then they started to pull back up early on. They became a significant tell or a sign, if you will. Let's hear what they have to say in terms of, are they seeing new buyers come in as folks retire and want to camp out, travel, visit family, and so on. So that'll be on Wednesday. And then, as I said, Tesla, Procter & Gamble, and a host of financials. And then on Thursday, we're going to have American Airlines. United is also going to come out this week. But we heard from Delta. Americans are still flying. Americans are still visiting folks. Americans are going overseas, especially with the stronger U.S. dollar against the euro. But we'll also hear from Union Pacific, and I want to hear what the trains have to say, because they're part of the bigger portion of transportation. We want to hear what they are seeing. We know that freight prices are coming down, whether it's shipping. We want to hear what they have to say. To me, extremely important. And Danaher, and I'm watching all of the industrials, by the way, because I'm actually seeing signs of life in industrials. Obviously, part of industrials are the defense names. And by that, I mean the military defense names. They're doing well, but it's obviously an extremely broad sector. And I want to hear what every industrial company has to say, because we're seeing industrials like signs of life coming up, like little green shoots. And then we'll hear from Freeport McMoran. And this is important because you know what's happened with the commodities. And then, as I said, on Thursday, the Philadelphia Fed survey will come out. Also, we're going to get housing starts, existing home sales, and here's the other one I like is the Beige Book, because that is, for the folks who don't know, that is the Federal Reserve banks across the country going and talking to customers, small businesses, large corporations, seeing what they have to say about the economy in the region that they are in. And it's important because, you know what, they're a little bit more up to date than some of the data releases that we get. And you could see the market pays attention to what they have to say. And then Friday is going to be Schlumberger, remember, part of the energy complex, right, for services. And we'll also hear from American Express. I'm interested in American Express, and this is the reason. Amex got a downgrade from one of the investment banks, one of the analysts. And the rationale for the downgrade was this, that, hey, you know what, with the economy on the brink of a slowdown or maybe even a recession, maybe the upper wage earners or the middle to upper wage earners, that's American Express's cohort, and also business travelers, right, use American Express. This analyst said, if that happens, what we have a deeper slowdown than we expect, spending is going to slow down dramatically. And therefore, he put basically a sell on American Express. We want to hear what they are saying and what they think is going to happen over the next couple of months. So I think it's going to be important for the market. But overall, in this market that we're looking at, right now we're in a market also now is still oversold. After Friday is oversold. So catalyst to move higher. I noticed that the 10-year yield pulled down a bit, which is good news. That's good news for the overall market. But the 2-year, remember why the 2-year is important. It is very closely aligned with Fed policy, what the Treasury market thinks the Fed is going to do. A lot going on in the market. So it's still, I believe, a trader's market. And, you know, for all the folks who complain about the Fed should do this, the Fed should do that. Everybody now, you know, is an expert on the Fed. Well, you know what? At the end of the day, we trade and invest in the market we have, not the one that we want. Pointing to something else before we close, China opened up its 20th plenum, National Communist Party Congress. They do this every 5 years. They come up with a 5-year plan. President Xi is expected to have a third term. And how is that possible? Because he got rid of term limits, and so he's expecting a third term. But so far, of the things that he has been outlining, he gave a 2-hour speech on Sunday. You may think that's a lot, but 5 years ago, it was 3 hours. Oh, yeah. And believe you me, they watched to make sure everyone sitting in that audience, their party functionaries, that they're paying attention. This time around, though, they're all wearing masks. I was looking at a picture of it. But in any case, if anyone thinks that they are about to ease the COVID lockdowns, the zero COVID policy, think again. Right now, it looks as if he is wedded to that policy and believes it has helped reduce COVID and save people's lives. He's very much, how should I say this, personalized it of why he thinks it's important. So now the market is saying, well, wait a minute. You mean you're not going to ease it? We still don't know, but it looks as if people may be disappointed because remember, their economy is very slow. They're the world's second largest economy. Another thing I want to point out is his comments about Taiwan. Very important. He made it very clear that Taiwan belongs with mainland China, that they will be reunified. Notice he uses the word reunified, that the unification is going to take place, that he would like it to be peaceful. Unfortunately, the Communist Party in Taiwan hardly gets any votes. But in any case, if they can't do it peacefully, he pointed out, force will not be ruled out. It was a direct message to the West and the United States that this is one of his main goals, is to bring Taiwan into the fold. He pointed out that Hong Kong now is stabilized. Well, of course, because basically they have taken over Hong Kong too. Keep in mind that Hong Kong was supposed to be free for 50 years until they reached that 50-year deadline when it was turned over from the UK to Beijing. But Beijing did not wait that long. So in any event, it's going to be extremely interesting. He made it clear that the military buildup is important. Those are part of their main goals. But all in all, the expectations are that he will be granted a third term during this plenum. And we'll be paying attention to what else they have to say. So I wanted to point that out. Take good care. Have a very good week. And I want to leave you with this note. At some point, the Fed is going to ease. It will be a transition to, how do I say this, calmer rhetoric rather than this intense, strident rhetoric about inflation. The market will pick that up, and the market will pick up, when it's clear that they're going to go from 75 basis points to perhaps 50 basis points. That will be a significant transition. And whether it is towards the end of this year or early next year, we're getting closer and closer. Please remember, inflation is coming down. And by the way, the supply chain challenges, easing. One survey after another suggesting it's close to normalizing. That will bring prices down too. Have a good week. Don't hesitate to get in touch. Thank you so much.
This material was prepared by LPL Financial. It's for general information only and is not intended to provide specific advice or recommendations for any individual. There is no assurance that the views or strategies discussed are suitable for all investors or will yield positive outcomes. Investing involves risks, including possible loss of principal. Any economic forecast set forth in the podcast may not develop as predicted and are subject to change. References to markets, asset classes, and sectors are generally regarding the corresponding market index. All indexes are unmanaged and cannot be invested into directly. Index performance is not indicative of the performance of any investment and do not reflect fees, expenses, or sales charges. All performance reference is historical and is no guarantee of future results. All information referenced in the podcast is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. Securities and advisory services offered through LPL Financial, a registered investment advisor and broker-dealer, member FINRA and SIPC. Insurance products are offered through LPL or its licensed affiliates. To the extent you are receiving investment advice from a separately registered independent investment advisor that is not an LPL affiliate, please note LPL makes no representation with respect to such entity. If your financial professional is located at a bank or credit union, please note that the bank or credit union is not registered as a broker-dealer or investment advisor. Registered representatives of LPL may also be employees of the bank or credit union. These products and services are being offered through LPL or its affiliates, which are separate entities from and not affiliates of the bank or credit union. Securities and insurance offered through LPL or its affiliates are not insured by the FDIC or NCUA or any other government agency, not bank or credit union guaranteed, not bank or credit union deposits or obligations, and may lose value.